The market didn't do a whole lot this week, but we've got more things coming up in the week to come. Let's talk about how we're going to attack the market. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap. My name is Chris. I'm part of Riz International, and we're a group of traders who are looking to help make our money work for us and us not work for it. And to do that, we're using the stock market, and we're going to start our market recaps like we always do here, taking a look at the S&P 500. But real quick, if you are watching on YouTube, go ahead and make sure you smash that like and subscribe button. Help us grow the channel so we can continue to reach other traders here on the platform. So as I alluded to earlier in the intro, it was pretty much a non-starter this week. If you'll notice, we started Monday at 41.37 and we closed on Friday at 41.32. So a whole lot of nothing this week, honestly. We couldn't break either direction. We were basically trading sideways, and part of this was fueled by somewhat lackluster earnings. I think people were expecting earnings to be a bit better than they were, and it really just hasn't panned out, to be honest with you. You know, we had our little run up after the inflation and, you know, the CPI numbers, and everybody was happy. And now we're just kind of trading sideways, which makes it an incredibly difficult time to be in the market. I know I feel like a broken record on this, but right now the market just seems like it cannot pick which direction it wants to go. And that makes it incredibly difficult to figure out how we want to trade. So we've been taking very, cautious trades. If you're in Elite, you'll know what Riz has been doing. I've been taking profit a lot earlier because if the market decides to break or we get a big catalyst one way or another, that can really wreck our positions, for lack of a better term. So it's like if you're betting now that the market is going to go down and you're piling in short and we have some good news come out and the market spikes, well, just got forced out of your short position and you got squeezed out. And that's not something you want to do. Right now, really and of course the opposite is true. If we go long, if we start going risk off, like everybody was thinking that was going to happen here, and the market tanks on more bad earnings, then you're going to be kind of pissed off that you're holding something long when you could have waited and got in a better position. So we're kind of looking at this 4,100 level right now as a really big area, and we're not really looking to do a whole lot until we make a decision one way or another. If we start pushing up north of 4,200, that could be a good indication that the market wants to continue to go up. But if we start to fail in this area rather, and we dip below 4,100 and we have a strong bearish move down, that could be a good sign that we want to go down for a while, and that could help us kind of direct which way we want to be trading at this point. But right now, market is moving sideways. Price action is basically dog poop, and it's a really tough time to be trading. So if you're making money right now in the stock market and you're profitable, pat yourself on the back, because this is an incredibly difficult time to be trading when we really can't decide which way we want to go. Let's take a look at the breakdown here, and honestly, there's not a whole lot to report. We did lose a bit here in communications this week, and tech is now the top dog, barely up, almost 20% on the year, and communications almost at 19%. So, I mean, we're really kind of holding these areas of the market are really kind of propping the market up at this point. We've got consumer discretionaries here basically trading sideways this week, and you can see really well here on the SPY ETF what I'm talking about when I say we're trading sideways. I mean, it's just a straight line across, essentially. So really no directionality either way at this point, which makes it incredibly difficult to trade, because when things trade sideways, it means we don't get a move up or down, which makes it hard to make money. We did see a bit of a pull up in consumer staples this week, but everything else is kind of trending down a little bit or below the zero line. Real estate is really staying right around zero. Energy is starting to trend down below 1% up at this point on the year. And we've got healthcare, utilities, and financials still kind of here sub-zero at this point, below the positive line at this point. So not too much to report on this. We're really not seeing a lot of moves, but some of these bad earnings we're starting to see here in the different sectors that we're talking about, and that has been obviously an issue that's been kind of weighing down on the market from it making a push towards 4,200. Let's take a look at the commodities markets here, specifically oil and gold, the two commodities that we watch fairly closely. After making a big run up with the production cut notice that we got from OPEC Plus, we have kind of pulled back down into this channel that we were stuck in for so long between around 81.85 and 72/73. That was an area we were really stuck in real tight here from basically the end of last year up until about the middle of March, and we've kind of broken down a little bit and come back up, and now we're back in that channel again. So no trade on oil at this point. And of course, we had this huge parabolic move on gold, and we start to seem to be coming back down. We did not make it to that 2050 area or 2050 where we had peaked out before here back in March of 22. So almost a year later, honestly, a year and a month later, we come close to it again, but we don't quite make it. Made it up to about 2040 here on the 13th, which was, last Thursday, and pulled back a bit down below 2000 after we were kind of, chopping around here 2000 for a couple days, starting to break lower a little bit. And some of that, I believe, is we're starting to see a little bit of strength come back into the dollar. Now, it's not a huge move, but we are seeing a bit of an uptick in the dollar right now, and we're seeing that reflected in the bond yields. As we see here, the bond yields are starting to curve back towards the upside, which suggests that we're seeing more confidence back in the financial system. Of course, this big dip here was when we had the bank failures. We'll have to see if continued rate hikes from the Fed will help, push this one way or another. But as we're seeing right now, it looks like 2-year Treasury bond yields are doing pretty well here, right around 4.2%. While we're seeing the 10-year at 3.6 approximately, and 30-year right below 3.8. So, we're seeing that nice move upwards from where we were before, almost a full percentage point here for the 2-year bond yields since, about the 5th of April. So starting to see that kind of pull back up as we see the dollar kind of start to hit support in this area and start to rebound up towards the north side. Let's take a look at the key market dates this week, and then we'll get to our questions. So if you're here live, go ahead and post your questions. I did get a couple of questions in our Discord server, so thank you for that. I'll go over those first and let all of our elite members who are here type in their questions now. A couple of big numbers. GDP on Thursday is going to be pretty important. Looks like they're expecting, an increase of about 2%, where, previous was 2.6. They're forecasting 2.3, so we'll have to see. It's falling somewhere in there, so that could be an interesting catalyst on Thursday. Wednesday, durable good orders. That's not going to be much of anything. You got core PCE price index month on month. That could be an interesting one. And Friday, this one will be interesting in my opinion, the personal income and personal spending. I think what we're seeing now is we're seeing spending start to decrease. And I think that's going to be reflected somewhat in these earnings. I think that's really kind of what we're seeing with these lackluster earnings coming in, is people are spending less right now because, well, inflation is up. And as we can see, incomes are not going up all that much, in my opinion. I'm not seeing any increase in my paycheck. I'm pretty sure everybody here would probably agree with me on that, that they're not really seeing too much either on theirs, but yet prices continue to go up. So when that happens, people start spending less because, well, you don't necessarily spend all your cash on those, goods that you can live without. We'll just put it that way. So these will be interesting numbers when they come out for the month-on-month change on that. But yeah, I expect, I agree with this forecast, honestly. I think spending is going to start going down as interest rates continue to climb and inflation continues to go up. Now, I got a couple questions from our members, so let me go ahead and take care of those first. The first one came from Jeff. You want to take a look at CRWD, and he's looking to take a position here. He wants to get above the 130 support and to get out to about 138. Very, very tight trade, and it looks like it could possibly work out for you here. Obviously, we've kind of hit this support area here right around 130, so I think that's a great idea as a great read on your support there. If we start, let me rephrase that. If we continue to curl up on this on Monday, then yes, I would say go ahead and take it. I think 138 is a very conservative and reachable profit target. It seems very doable to me. And, earnings aren't here for a while. We're not looking like we're overbought or oversold. And so I think if the market decides to go up, that'll definitely help this one for sure. We have been rebounding on this from this 94 area since looks like about January of this year. So really nice little quick swing trade that could definitely work out for you. I don't think that you're risking a lot, especially here if you're looking to risk off of 130. That seems like a pretty fair place to go, in my opinion. So I like it. I think that sounds like a pretty fair trade, and I am not opposed to that in the slightest. And now from my good buddy Abby, writing in about Tesla, everybody's favorite EV maker. Said he couldn't make the webinar, but he'd like to take a look at Tesla looking real weak after earnings. Yes, it sure does. Looks like we missed revenue a bit. A mere 266 million off. Though the EPS was up. So they did beat EPS, but they failed on revenue. I'm not sure what the guidance is on this, but obviously with continued tensions in, between China and the United States, I think that's going to weigh heavily on Tesla, considering they still have manufacturing in China. So everything going on between China and Taiwan, all the rhetoric, all of the things going on there, in my opinion, is going to weigh pretty heavily on Tesla since they still have manufacturing there. So I agree. It looks incredibly weak right now, and I'm not overly impressed. Tesla not as big of a mover as it used to be back in the day, but still getting close to being oversold here. I'm not sure if I'm going to jump in short on this. It could be a play for you. I mean, obviously we are kind of slightly trending down here. I'm not going to say this is, really doesn't have all that many data points to support it. Let's see if we pull it back out, if we can get some technical analysis magic going on here. No, nothing super cool to do that with, sadly. But yeah, I mean, we definitely have kind of dipped right here to this inflection point right around 164 and the 164, 165, somewhere in that area. So we have come down here before, and let's just go ahead and draw that line because that looks pretty solid to me. Yeah, there's definitely a lot of support in this area here around this 166, 165 area. Again, these aren't perfect, but yeah, it definitely looks weak. I'm not sure if I'm jumping in short on this one right away because we are looking pretty close to oversold, but it definitely leaves a lot to be desired. I don't think I'm going to dogpile and log on Tesla at this point. Obviously, yeah, with everything going on with China and all the rare earth mineral things that they're snagging up and will be incredibly difficult to get for EVs, I'm concerned about Tesla at this point. So yeah, I wouldn't be taking this long, and yeah, it looks weak to me. That being said, things could calm up tomorrow in Taiwan. We never know. And things could start looking back towards the upside. So a great couple questions from our members. Really appreciate that. I'm not seeing anything here from the live chat. So we're just going to make this one a quick one. I know your time is valuable, and I want to make sure that you're getting, everything you can in a quick condensed format, especially when Riz isn't here. I know Riz likes to talk a bit more. But yeah, I would honestly, we're really just waiting this week. We want to see, we've got some big names coming up on earnings this week, so we kind of need to wait and see for that to come out before we make any decision on, how the market wants to behave. But right now, it's incredibly difficult to trade. And I think the overall message is sometimes, and this is a line that I've used before, I'll use it again. It was from an old movie back in the 80s. It's called War Games. And they said the only winning move was not to play. Of course, they're referring to nuclear war. But when the market is behaving like this, sometimes the winning move is to not take a position. And being in cash, remember, is a position. So we need to have some directionality on the market before we can make a decision on what way we want to start trading. When that happens, we'll be ready to go. And you should be ready to go too. So keep your powder dry, keep it ready to go. And once this market makes a decision, trust us, for all of our elite members who are watching this, we are going to be ready to go as well. So with that note, I want to wish everybody an absolutely happy, wonderful weekend. Take some time for yourself, have some fun with your friends, family, or just take time to relax and be ready to go, because we'll see you in the market on Monday.